mentioned a lot of them. You said some paid, some have not. From on almost every single category. Have you found any category where all tenants in that category have paid?
Nope.
Do you mind sharing what percentage of rents that you're seeing being paid across the board?
It really depends on your portfolio. Ours is less than 30%.
As you mentioned, this whole thing will be a giant case study, and I too am very fascinated and excited to see, kind of what information comes from this, just in understanding consumer behavior. All right, guys, I'm here with Ray Bayat. Ray, thank you for joining us.
My pleasure.
So, Ray, you are very accomplished here. Pulling up your bio, I'm going to read from the screen here just so I don't mess up. You started out as an entrepreneur in the late 80s. You owned a franchise restaurant and you had a couple of retail businesses, and from there, I guess you realized the brokerage community and acquisitions and redevelopment and sale might be a better way than as opposed to running the business. Maybe, who knows? But you jumped into Grubb Ellis in '97. And you worked with Grubb Ellis from 97 to 2003. You were one of the top salespersons for them. You were Circle of Excellence, for a couple of years there. And then in 2002 with Mitch Bayat, you pursued NetCo Investments. And NetCo Investments decided to pursue value-add shopping center developments and investments. Since then, you have been involved in the acquisition, redevelopment, sale, and financing of more than 1.2 million square feet and transactions valued at over $300 million. So you've had a cool history there. Was I right or wrong about the jump from franchises and retail into brokerage?
Well, there was a period of transition where I managed in these little strip centers, and then eventually went to grad school. And for a short period, I was working for the largest master plan community development company in Southern California.
That must have been interesting. Nice. And that was Newhall Land.
Yeah.
I skipped over that one part right there. I got you. So right now. So to where you are now, who are you? What do you want the world to know about you?
Just that we're focused on mostly buying existing shopping centers and have been since 2002 and re-tenanting and redeveloping them. And we've established great relationships with the national and regional tenants. And now with a development partner looking at new developments before all of COVID-19 came about. And I was based in Southern California before I moved to Texas in 2012 and have been here since.
Wow. COVID, you mentioned that. It's April 16th right now, and we are in a worldwide pandemic. I'm in my home. Looks like you're at an office there. Are you at your office?
Yeah, I just could not bear being home anymore. I'm actually opposite of most people. I really need to get into the office.
Yeah, no, I hear you. I need to have a special space for myself. But worldwide pandemic, as of April 16th, we've got worldwide 2.1 million cases with 526,000 recovered, 660,000 closed cases. And in the United States alone, we're looking at 646,000 cases. The one thing that has been a bright light, I guess, at the nearing the end of the tunnel is that we've seen the growth rate rapidly declining. I think I've been following a gentleman on social media named Paul Adams, who really pulls a lot of stats together. And right now, as of yesterday, I think the growth rate was 4.3%, down from a high at one point of over 50% growth rate. So we're seeing a reduction in the growth. So I think that's super positive. But clearly it's had a massive impact on the world, not only from a health perspective, but from an economic perspective, having to completely shut down certain areas, switch to essential businesses only in many other areas. And that leads to, closing up of a lot of retail shops. You managing retail centers, have a really good insight into what's going on. And I want to talk to you here. I remember I've seen a couple of your posts, and you've talked about how this pandemic has brought a whole new meaning to your credit tenant. Can you talk to me a little bit about what the direct impact has been for you?
Sure. So as time goes on, we're able to assess the impact better and better. The notion of national credit is being challenged right now. All of us in the shopping center business, particularly myself, we've been focused on doing leases with junior box credit tenants because we can depend on that income stream better. And so they get a lot more concessions and they demand a lot more than a typical mom and pop business. Well, in today's world, all of that is out the window. We're getting letters from all the national credit tenants asking for rent relief, deferment, abatement. And so one by one, we're addressing those. So I kind of, in preparation for this, broke it down into there's some businesses or tenants that are deemed essential or actually operating open. So for example, grocery stores. Some in our portfolio have paid rent. Some are deemed essential and operating full hours, and they have not paid rent. Drug stores, some have paid rent, some have not. And the dollar stores are kind of the deep discounts. Again, some have paid and some have not. And in preparation, I consulted with some of my peers in the industry, and I constantly every day talk to them. And this is a consensus that we're getting amongst all the landlords and property management companies. And then those that are non-essential, any of the off-price clothing stores that have been impacted most because they've had to close. Some of those tenants have paid April rent and want to negotiate thereafter. Some have not paid rent, and some have paid rent, and there's no communication at all. So we don't know what's going to happen in May and thereafter if this continues. Office supplies, again, in some instances, they have not paid across their entire store count. Some have paid. And then gyms and movie theaters, as you can expect, are completely closed and they're not paying them. So that's kind of the national tenants and bigger junior box type stores. And then the mom and pops. Actually, before I go there, as far as restaurants, some of the national sit-down restaurants that I think we've seen the headlines, like Cheesecake Factory, have just announced across the board they're not paying rent. I have a friend of mine who's a fast food franchisee. Maybe he owns 200 plus of the concept. And in a discussion with him, it was interesting. He said in some of his locations, actually just purely through the drive-through, their sales are up. It's case by case. Some locations, they're down 20%. And some, they were open and operating through the drive-through, but they were losing money even on the minimum sales that they had, so they just chose to close those.
Wow.
So it really is case by case for those restaurants. And then the sit-down restaurants, like I said, in my portfolio, some of the mom and pop sit-down restaurants that are full service, they sort of at the beginning decided that they want to try to figure out a way to do pickup and curbside and delivery. And as time went on, they felt like it just wasn't worth it, and they were still losing money, so they chose to close. So that's really just a kind of a summary of what I'm seeing and the ideas that I'm getting from my peers in the industry and property management companies.
Now, you mentioned a couple of things there. And I want to take this in two directions. But first and foremost, you mentioned a lot of them. You said some paid, some have not. From on almost every single category. Have you found any category where all tenants in that category have paid?
Nope.
Okay. So
I find that fascinating, especially with the grocery stores,
right.
because they're all open and operating. And
doing well, you would think.
Well, you would think, but then I saw some statistics where they had a massive spike in sales because people were hoarding, and then now it's kind of declined, and it's continuing to decline because the number of visits to the stores are dropping. And so you would think that they're not losing money, so they should be paying rent. But that's what I find fascinating. And talking to a friend of mine who manages 40 million square feet this morning, we went through his portfolio, and he's got some grocery stores that have been operating full hours but haven't paid rent, which is just fascinating to me. I believe that some are really taking advantage of the situation.
Yeah, I'd imagine so. I mean, and a quick tangent, you wonder if the reason for that potential decline in sales comes down to consumer behavior, where normally somebody will make a trip once a week to the grocery store and they'll end up picking up things they don't need just because they're there, as opposed to going maybe once or twice a month and getting everything you need at once. I would imagine that, and probably with a concern about money, they're more conscientious on their spending. I wonder what studies are being done on consumer behavior. But diving back.
I mean, moving forward, this is going to be the biggest case study for researchers and psychologists and social scientists to figure out the human behavior based upon a pandemic.
Yeah.
It's going to be studied for many years to come, and I'm actually very fascinated to read up on that.
Yeah, without a doubt. You've all know Harari. Have you ever heard of him?
I have. I have not read his book, though.
This is one of them. It's actually my favorite. It's 21 Lessons for the 21st Century. But anyway, he talks about how information and data will likely become the commodity of the future.
Yeah.
And so, I can only imagine the value in the data of what consumer behavior looks like during a pandemic, or say a situation where they need to adapt. So very, very interesting stuff. Now, diving into the rents, do you mind sharing what percentage of rents that you're seeing being paid across the board?
It really depends on your portfolio. Ours is less than 30%, but in certain instances it could be more. It's all over the place. That's why it's so unique, in that you would expect across the board, if businesses are open and operating like grocery stores and drugstores, that they would be paying rent. And so it's hard to gauge right now. And we may, in the next day or so, receive our rents from those that are being essential and operating. So I think it's just across the board. But what I'm hearing is anywhere from 50 to 60%, all the way down to 20s and 10%, depending on what type of portfolio you have.
Wow. I was reading a little bit into this and diving in, and the insurance companies are not paying out. That's one thing, and that's been an issue. The stimulus package is taking a while. We can dive into that in a little bit. Do you think that when this all kind of comes to fruition and we're at least starting to move back to normal, I know we won't really see a normal like we knew it before for probably quite some time, but I'd imagine some businesses are going to start to be rolling back out again, non-essential and whatnot, in the next 60 days, if not a little sooner, and maybe almost everybody, with the exception of large events and sports with fans, probably by the summer, I would imagine. Fingers crossed. Do you once we get to that point, do you see the court system forcing these people to pay rent and pay all this back rent?
Well, I think the court system is going to be just inundated. If most litigation takes several years now, and I think it's just going to get worse. So I think it's in the best interest of landlords and tenants to try to work those disagreements out and not let it go to litigation, because that just doesn't achieve anything. Our goal is to work with every single one of our tenants, so long as they're reasonable.
Sure.
And for example, if a grocery store is open, conducting sales, regular business hours, and they haven't paid us rent, and they refuse to pay rent, and they want to negotiate, I'm going to have a very difficult time coming to an agreement with a tenant like that. But I'm realistic. If a tenant has been forced to close, for example, our restaurants, and especially if it's a mom and pop, I'm going to bend backwards to try to support them as much as I can. So I would anticipate that everyone's going to be reasonable and hope that it doesn't get to litigation and get tied up in the court system, because I just don't think that's going to be it.
Yeah, without a doubt. You mentioned recently, I was on another call with you, and you had mentioned that, right from the get-go, you knew this was going to be a problem, and you knew it was going to be something that stretched out. And so you started an initiative with a lot of your tenants where you wanted to work with them in some form, one way or another, to help them navigate the upcoming months. You had mentioned a couple of strategies that you were looking to put in play to make sure that your tenants had the support that they needed to succeed. You mind diving into a little bit of that?
Sure. So we can do that with our mom and pops because they're a little bit inexperienced in handling situations like this, whereas the national tenants, again, you have made an agreement on a lease with them, hoping that they know what they're doing and they have great executives in place and they can make decisions and withstand this. So we really focused immediately on our mom and pop businesses, and every other day or so we were calling and asking how they're doing, what can we do to support them. And in one center, particularly because I have a lot of mom and pop businesses that are either restaurants, nail salon, dentists, physical therapy, and a hair salon. And what we decided to do with them was, a lot of them didn't have a social media presence. So what we decided to do was hire a company to help them navigate and try to promote themselves during this period. And we identified the company, but within a week or 10 days, what we noticed was we're about to sign the contract with the company, we're going to pay for it all, and we're going to help support these tenants. And what we found was, one by one, they just decided that it wasn't worth it, and they decided to close. So some restaurants were at the beginning open, doing curbside and pickup and delivery, but as time went on, they felt like it's going to be much longer than 30 days, 60 days or so, and they were going to lose money, so they decided to close. So we shelved that, but what we decided to do was sign that contract, knowing that when we come out of this, they're going to need all the support they can get. So we got that going. It's ready to go. And one of the things we did was to make sure that the customers in that market are aware of the steps that we've taken to essentially make the restaurants and the establishments safe for them. We hired a company that does kind of hazmat cleaning and paid for it, for this company to go through all the tenant spaces when we know there's a kind of a date by which we're going to get the order to open up. And we're going to shoot video, and then this company is going to put stickers on the windows of these establishments so that it gives the customer in the marketplace a sense of safety, that we've taken the measures to sanitize the place and so that they're feeling safe to come back. And then we're going to promote that extensively through the company that we've hired, the marketing company. And also we're continuously checking in with these tenants, making sure they know about the PPP program and various other SBA loan programs. Hand-holding, and in some instances, they're having a very challenging time understanding all the complexities involved. And in some instances, we're offering to pay for either their accountant or their attorneys to help them apply for these loans so that it gets them some funds to get them through the next 60 to 90 days. So, and also in some instances, like with our restaurants, what we did was to support the local police, fire, and emergency rooms. We contacted them, make sure that we could deliver food, and ordered food from our own restaurants to be delivered to the police, fire, and emergency rooms as a good faith gesture to the community, but also trying to support our tenants. We've done everything possible to support these small mom and pop businesses, and they're going to have the most challenging time coming out of this. And so aside from the funds that are going to be available from PPP, to pay for rent for the next 60 days, they're going to need help beyond that. And so we're going to be similar to what I did back in 2008 and 9. We're almost going to become like small business consultants for them to support them in any manner we can. And for the restaurants, I'm even considering hiring a restaurant consultant who can support them and giving them ideas of how to emerge out of this and sustain and then thrive thereafter. Anything we can do to support them, because it's going to be a lot less costly to support these businesses than it is to go through the downtime, pay for tenant improvements and leasing commissions to backfill these spaces, and it may take several years to get. So I'd rather go with my existing tenants than try to hope that 2 years, 3 years down the line I can backfill that space.
Yeah, absolutely. No, I mean, that's, it's a math equation, right? You know, you look at, okay, if this is going to sit vacant for 12 months and I'm going to spend, who knows, $10 a square foot in TI, $30 a square foot in TI, you know, depending on the term and you know, the commissions, 6% of the total, you know, that it adds up, and that's smart. I love those ideas, and I'm excited to see how it plays out. And
the longer this goes, I think the more challenging it becomes for the small restaurant operators to reopen. And so even once we open up in 60 or 90 days, or however long it is, the number of new restaurant businesses being established are going to be dramatically impacted for years to come. I don't think you're going to have a lot of people trying to get back in the business and opening restaurants, particularly. So I'd still rather go with my existing tenants and do whatever I can to support them, to help them come out of this, as opposed to take chances with trying to backfill a restaurant with a new operator in the foreseeable future.
Perfect. No, I love that. So, you know, short-term asset management strategies, you're focused on investing as much as you can in your existing tenants, specifically the mom and pops, because you assume that the big box guys have an executive team working on it, investing in them and making sure that, you know, you're doing everything that you can to help them succeed, because the cost of having to find somebody new far exceeds the cost of hiring a consultant or two to help them throughout this process. I love that. From the perspective of now managing the portfolio, you know, financially, working with your lenders, working with your investors, from that side of the conversation, what other short-term asset management strategies are you working on?
Well, we suspended all distributions to our investors across the board. We're trying to preserve as much cash as possible. We're going through every line item on the expenses and try to see if we could cut back the level of service and cut expenses as much as possible. And then in the short term, case by case, depending on the property, we're trying to see if we can get a 90-day deferment for going to interest only with the lenders. And in 90 days or 120 days, we'll have a much better, clearer picture of where we stand. And then if we need to still go back to our lenders and try to solicit some help, then we could do that. But at the moment, I don't think any lender wants to hear for a longer plan than 90 days from now. We're making our payments. We're not going to go into default whatsoever. You have to do that to have a conversation with the lender. And so those are the strategies we're taking. And then we're doing worst case scenario. We're doing a debt coverage ratio based upon the worst case scenario. We're looking at our cash flow based upon worst case scenario, see when we run out. We're constantly running those analysis just to wrap our head around where we're going to stand.
What is your worst case scenario?
Well, we're making assumptions on each property, correct? Tenant by tenant. So we're going to make worst case assumptions if we know that they're a publicly held company and we know we have access to their financials. And we look at it and say, okay, this tenant was struggling beforehand and very likely that they're not going to emerge out of this. So we're just going to write them off as though they're going to vacate. They're going to file bankruptcy and vacate, and we're not going to have any income from them. And then in certain instances, with the mom and pop businesses as we're getting financial. So all these mom and pops and even some of the national tenants that are privately held by private equity, we're asking for financials. If we get them, then we can analyze those and figure out, okay, what are the odds of them being able to come out of this? And then just making assumptions based on our best guess of review of their financials and where they stand. And off of that, then we're doing our cash flow projections and our debt service coverage ratios and so on.
Are you or do you or have you required all tenants to share financials if they're not a publicly traded company?
Absolutely, yeah. The first thing we're doing is if they're sending a letter to us, as the national tenants have, we're asking them to share their financials, the P&Ls and the balance sheets, as well as the sales broken down month to month over the last 36 months. And we're hoping that they share it with us. The mom and pop, they're going to share it with us. And so, like, for example, yesterday we did receive it from a dentist, and we're evaluating those financials and making a decision of how to work.
Sure. So as we kind of crawl back out of this, and things start to open up, obviously you want to keep the tenants that you have. You're investing in those people. It's far less expensive to invest in them than it is to have somebody else. Would you tack on the lost rent onto the end of the term or amortize that over the remaining term, or would you just completely forgive it? What does that look like, and how does that impact your position?
Case by case, it really is, and it's all tied to the financials. If we and the use, it really is dependent all across the board. I can't give you a kind of a universal answer.
If they're in poor financial position, are you just writing them off, and are you just not investing in them at all? You're like, hey, listen, they were going to fail anyway, or is there a different approach that you're taking?
Well, across our portfolio, we didn't have many tenants that we felt like, actually I take that back. There's two actually national tenants that we felt like that they were not going to make it before COVID-19. And for sure, we believe they're not going to.
Are you able to share that, or is that?
No, I don't want to do that.
Just trying to get the good stuff, yeah.
Yeah, but aside from those two tenants, even the mom and pops, we never felt like they were in a position that they were going to fail. Because we didn't have any aged receivables. They had all been in business for at least several years, some longer than that, 10, 15, 20, 25 years. And so there was really, other than those two national tenants, we didn't feel like we were in a position that we're going to lose any tenants. So we actually will continue to invest in all these businesses because we believe, again, it's best to support them rather than try to backfill the space. Because honestly, I don't know 6 months from now, a year from now, or 2 years from now, whether we're going to be in a brief conversation we had before, whether it's a depression or a recession, and how deep it is, and what's going to emerge out of this. So I'd rather focus on trying to support these tenants as much as possible.
Sure.
To hope we keep them rather than try to suffer a vacancy and try to backfill.
So you're focusing on what you can do now to help them because it, mathematically it makes sense from a profit perspective, and you have a fiduciary responsibility to your investors. I'd imagine. So looking at that, you got to make decisions that are in the best interest, and clearly it is. If you can spend $25,000 on a consultant, a lawyer, an accountant for somebody for a couple of months, and maybe you're spending $250,000 across your entire portfolio. That's a lot less than the $200,000 you might have spent on one space to turn it over. So it makes sense. But a lot of people are saying they're preparing for the worst and hoping for the best and doing what they can now. I love the strategy you're doing now. In terms of preparing for the worst, are you I'd imagine, are you documenting everything that you can have to prove that they're in default, like breaks of rules and regulations of the store hours? Are you documenting the financials? Can you tell me about what you're doing to document this process to make sure that you're protected?
Yeah. So obviously with all the mom and pops, we're in constant communication with them, but also with the national or regional credit tenants, we're calling their stores and seeing if they're open, do they have reduced hours? And one of the interesting things I find is that there's still 8 states, the last time I read a couple days ago, that have not put in any shelter in place or stay-at-home orders. So if I'm an owner and I own a shopping center in Wyoming or Arkansas that do not have those orders in place, and if I have a national tenant that's elected to close its store, that's something I want to document. And that's going to be a negotiation point that's saying, look, you could have operated in this situation because there's no order from the city, county, or state for you to close. So we are absolutely documenting everything like that. Checking in with the store. What are your hours? Do you have reduced hours? And then checking in with the city or county as to what the orders are as far as shelter in place or stay at home. And then documenting the conversations we're having with the tenants. All of the national tenants that wrote us letters, we responded. And within that response, obviously we have empathy for their situation and we express that. But then at the same time, we ask for financials and P&L and balance sheet and sales. And if they don't cooperate and provide that information, we are documenting all of that, because that to me is not a fair cooperative circumstance. If you're asking for us as landlords to do concessions, rent concessions, deferments, and anything, we understand, we're empathetic, we're going to work with you, but at the same time, you got to provide this information. So absolutely, we're documenting everything, the dates that we talk to them, the hours, the individuals that we speak to, everything, because we just don't know what's going to happen. And if people are going to be fair in their negotiations and honor their commitments and work towards a resolution, or if they're going to take a combative litigation type of attitude.
Yeah, without a doubt. And it's very crazy to me that, grocery stores that are open and operational, and still, working full hours and selling lots of food, maybe not as much as before. You would think that they would still pay, but I bet they're going to be the first to be litigious. All right, diving into, we could probably dive more into that, but that was great. I really appreciate that. Diving into long-term implications, you were mentioning that you were kind of casing out worst case scenarios, right? I mean, a lot of people, they think, oh, landlords, they just sit back and collect cash, Donald Duck or whatever, diving into his pile of coins. I'm sure there's some out there like that, but for the majority of landlords, you've got lenders, you've got investors, and a situation like this is not sustainable for the long term. Even if you've got some cash on hand, you're suspending distributions, you're investing in these tenants with consultants. For most people, if this happens for 3, 6, 9 months, that's a really tough situation. What do you see happening long term, and how are you preparing for that, aside from what we already talked about?
It's really hard to predict that because we have no idea how long more this is going to go on. And then from the scientific field, if they're going to be able to come up with a vaccine quickly, or once we open up the economy, are there going to be orders in place? For example, California has potentially considered that they may not allow restaurants and bars to go back to their occupancy levels as far as number of customers. It's so hard to predict what's going to happen. It's almost like daily we have to reevaluate things as we move forward.
Right.
Luckily, across my portfolio, we're conservative, so our leverage is low enough that we can stand the shock and then be able to put our arms around the circumstances and the challenges and figure out a solution. That's what I really kind of differentiate between what I would consider the really passive, non-real estate practitioners who own shopping centers, and those who are in it day to day and have been practicing it for a long time, and so they can solve these challenges and problems. Those that are passive and non-real estate, non-shopping center practitioners, they will be facing challenges because they're not going to know how to support their tenants like we are, how they're going to backfill space, what tenants to talk to. Maybe they just bought a stabilized shopping center and they're depending on that cash flow stream, and they're highly leveraged. Maybe they have 75 or 80% LTV loan loss. I think that's going to be a very tough challenge for them. Whereas someone like myself, I can roll up my sleeves. I've gone through it multiple times. I have tenant relationships. I know how to lease a property. I've actually canvassed myself and walked center to center and called on tenants, and I'm suspect that I probably will be doing that in the next 6 to 9 months. So it all is going to depend on who's the operator, what's their background, what's their experience, and then when we emerge out of this, because look, if in 60 days some drug company announces that they have a vaccine, well, the reaction from the marketplace and the consumer is going to be vastly different than if we open it up and there's still no vaccine. People are afraid. They're not going to visit their favorite restaurant. They're not going to go to their hair salon. And they're not going to go shopping as they would. That's a vastly different scenario than if there's a vaccine, because then everyone's going to feel safe and say, okay, well, if I get coronavirus, then I can just get a vaccine. Too hard to predict. We're going to have to go day to day, week to week, month to month until we kind of figure out where is the sort of equilibrium of the fear subsiding and the optimism kind of coming back.
Right, without a doubt. Wow. Well, Ray, this has been awesome. We're coming on 30 minutes here. Do you have time for one more question?
Sure, absolutely.
Cool, man. Thank you. Pull it up here because I took down a couple of notes. I want to make sure. So let's see here. A lot of people are saying that in normal circumstances, a vaccine would take 7 to 9 years to research, develop, manufacture, distribute, and actually move forward. And they say that with everybody in the world collaborating, everybody focusing on this, it could probably be done in 12 to 18 months or less, in a perfect world. So let's say that it doesn't happen for 18 months, but let's say we start moving back and when we start opening things back up again, the federal government is printing a ton of money. They're really stimulating the economy. You could argue whether or not you agree with how they did it or not, but the fact is they're putting a lot of money into the economy, I think people are just starting to get their funding this week for the small business loans and the PPP loans, and I guess the consumers on the consumer level federal stimulus check. Do you see the federal activity right now as sustainable over these next, say, 12 months? And do you see that as a way to support our economy from completely crashing before a vaccine comes out, or do you think that some significant other measures need to be taken to mitigate the potential collapse?
So I'm not an economist, and I don't pretend to be, but my prediction is that this stimulus is not sufficient, and there's going to be a second and possibly even a third one. That's just what I anticipate, because I don't see small businesses surviving, and I see this money running out. And so there's going to have to be additional support. And in the long run, I guess it all depends on this big social experiment of what our behavior is going to be when the economy opens up. Personally, I'm in the office today because I just cannot work out of the home, and I'm willing to come into the office. My wife is concerned. If tomorrow the economy opens up, I will go to restaurants. She is more concerned. So that's why I'm saying it's going to be a massive social experiment to gauge what happens. Some people that I'm talking to feel so compelled, and believe me, Monday and Tuesday of this week, I felt the same. I wanted to be in a crowded place and feel the energy and the movement of a public place and crowds and people and noise and so on. I'm so starving for that. And so when we open up, is this going to be a massive amount of people going to restaurants and social places and so on because they've been starved of that? And the sales to restaurants and businesses and so on kind of bounce back right away? Or is there still going to be some fear and uncertainty related not only to the coronavirus, but also people's financial situation? And so is that going to prevent people from bouncing back? And are we going to, for example, all these businesses that have furloughed their employees, are they going to hire back the entire labor force, or is it going to be a reduced one? All those factors, I think, play into how we bounce back and how long this is, and then the stimulus, if it's necessary to do a second round or a third round by the government. None of us have lived through this, right? So it's going to be a massive social experiment. And then based upon the data that's coming in, adjustments will have to be made. And we're all going to have to figure it out as we go. But again, I'm not an economist. I can't predict what's going to happen, but that's my just sort of overall view.
Sure, absolutely. Well, awesome, man. Hey, I really appreciate your time here today. Any final thoughts that you got, or do you think you shared everything that you wanted?
Well, as a guy in the shopping center business, it's interesting. Before COVID-19, the perception was that shopping centers were obviously being very much impacted by Amazon and everything online, and still 90% of sales before COVID-19 were through brick and mortar. A large segment of the population, I was reading a statistic where 42% of the population in the U.S. had less than $400 in savings. This is before COVID-19. And they're living paycheck to paycheck. And that segment of the population is not shopping on Amazon. They're going into the brick and mortar, and when they get their paycheck on Friday, they're shopping on Saturday or Sunday. I think that segment of the population will increase after COVID-19. And I still think that there is a place for brick and mortar. Yeah, there are going to be a large a number of shopping centers that are not going to survive, and they will never be another shopping center. They'll be repurposed. And overall, I think we're over-retailed in the U.S. versus other countries. So yeah, retail is going to go through a transformation. And as a result of everything that happened before COVID-19, a lot of the institutional capital was exiting the shopping center industry for that exact reason of the fear of Amazon and its impacts. Well, I think this is going to accelerate that. I think there's going to be more of an exodus in institutional capital, which for someone like myself is actually a positive note in that I'm going to have less competition. And so in the short term, I'm pessimistic just because of all the dynamics of what's going on. But in the long run, I'm very optimistic that someone like myself and my peers who have been in the business for a long time are going to really take advantage of the opportunities that are going to be presented to us in the next 2, 3, 5, 10 years as retail goes through this transformation. And my prediction is that Amazon in 5 years will have thousands of stores all across the country. Grocery stores that they just announced that they're doing in Southern California, a traditional grocery store, non-Whole Foods related. They have their sort of convenience stores, and they're just going to pour a lot more capital into opening stores. And my prediction is we'll see a lot more Amazon stores starting soon.
Yeah, I think there will be a massive shift no matter what, and that's a very interesting take. So I think you're right. I think there's massive inequality already, and I think this great wealth transfer will only increase that inequality. And it's a good point in the sense that a lot of people that are living paycheck to paycheck aren't really shopping on Amazon. You're probably right by that. And I'd be curious to see more data on the consumer behavior with different household income levels and how much they shop on Amazon. Because I hadn't really considered, the demographic of people shopping beyond, anything at a surface level. So I'd be curious to see, because everybody knows there's going to be a massive shift from this no matter what. I'd be curious to see what the differences are in the different income classes and the wealth classes. And, as you mentioned, this whole thing will be a giant case study. And I, too, am very fascinated and excited to see, kind of what information comes from this, just in understanding consumer behavior. Cool. Well, hey, thanks so much, Ray. I appreciate your time.
Cool. Appreciate it, buddy.